Welcome to 5-Star Metals 5-Minute Fridays, where each week we will endeavor to give you all the important events that occurred this past week in 5 minutes or less, hopefully, concerning the U.S. economy, world economy, and oil. So let's jump right into it. U.S. durable goods orders for non-defense capital equipment, excluding aircraft, rose 3.1% in the 3 months December through February over the same period last year, but were down 3.7% compared to the months of September through November. U.S. rail freight volumes declined the first 3 months of 2019 compared to the same period last year. And while U.S. unemployment numbers are great and looked fantastic when we looked at the report last week, I did want to make one note. Manufacturing shed jobs for the first time in 19 months in March, and construction is down from its January peak. The International Monetary Fund issued its World Economic Outlook and now projects a slowdown in 2019 for 70% of the world's economy. Global growth is projected to soften to 3.3% in 2019 and affects the economy as a whole. But the other interesting thing about the report is when you look at the next chart, you see just how far the economy has fallen and how high it was in 2018. The U.S. announced its intention to impose tariffs on $11 billion of EU goods, stemming from the EU's continued subsidization of Airbus. But the tariffs will not just affect airplane goods or airplanes. It will affect a wide variety of goods manufactured in the EU. And this could be particularly bad news for the EU given the overall softness of the EU economy that we talked about last week. Americans are now feeling gasoline prices climbing, perhaps up to or crossing the $3 line, which could impact demand side, so something to keep an eye on. However, Brent calendar futures were particularly good or have become particularly good this past week. Remember, we've talked about contango being bad because it means that there's probably an oversupply of oil and backwardation being good. Brent crude futures and West Texas Intermediate are now firmly in backwardation, with the 6-month spread being $3.24 a barrel for Brent and $1.92 a barrel for West Texas Intermediate. You may remember last week that we discussed that Saudi Aramco had issued its first ever bond prospectus seeking to raise $10 billion. Well, they got a lot more than that. They now have offers to purchase $100 billion worth of bonds. So that shows some overall confidence that the market has in Saudi Aramco. Chevron and Anadarko have announced a deal whereby Chevron will acquire Anadarko Petroleum for cash and stock valued at $33 billion. This represents $65 a share for Anadarko and is a 37% premium over Thursday's closing price. It will be the 11th biggest deal ever for an energy and power company. It will also substantially allow Chevron to expand its Permian holdings. It allows the companies to create a 75-mile corridor across the Delaware Basin and portions of the Permian that will allow it to capture some operating efficiencies and potentially reduce its costs. And other news concerning Shell oil companies, both Pioneer Natural Resources and Laredo Petroleum announced their intention to lay off employees and cut their workforce. OPEC. OPEC issued their monthly oil market report. It shows a 534,000 barrel per day decline in March to total production from OPEC of 30.022 million barrels, according to secondary sources. And the chart I'm showing you now shows where those cuts came from. Interestingly, Saudi Arabia continued to take the laboring ore, and while Venezuela would have been projected to have a drop in supply, they didn't drop it by as much as we thought, so that's interesting. Overall, when you look at OPEC's production compared to the 12-month average, you can see just how dramatic that is. OPEC also did cut demand forecast for the remainder of 2019 by 30,000 barrels a day. But if you look, OPEC is in 155% compliance, and if they continue to produce at the March levels, the graph I'm showing you shows whether the market would remain in oversupply or undersupply or balanced. So OPEC projects that it'll take about 30.30 million barrels a day in 2019 to balance. The United States Energy Information Agency released its short-term energy outlook. It increased the spot price average for Brent crude to $65 a barrel in 2019, up $2 a barrel from their last report, and $62 a barrel in 2020. The EIA expects West Texas Intermediate crude pricing to be approximately $8 a barrel a day lower than Brent for the first half of 2019 and gradually fall to $4 a barrel difference later this year through 2020. OCD petroleum inventories are now lower than the 5-year average. Global fuel inventories declined by 700,000 barrels a day in March, and on average about 500,000 barrels a day for the first quarter, which would be the first quarterly stock draw since fourth quarter 2017. If you look at the graph I'm showing you, the EIA basically kind of echoes what OPEC does, which is markets are either delicately imbalanced or slightly undersupplied, but either way, there's not a huge delta between the amount of oil available and the amount of oil demanded. Canada this week announced their intention to potentially block the new United States, Mexico, and Canada Free Trade Agreement, i.e. new NAFTA, unless the United States repeals Section 232 tariffs. U.S. Crude imports averaged 6.6 million barrels a day last week, down by 164,000 barrels. Inventories increased by 7 million barrels from the previous week, according to a poll by S&P Global Platts. Inventories were projected to increase 2.8 million barrels. I want to show you inventory in terms of days of supply, because I think when you look at that, you can see really how much it has increased since December. And because that takes in, obviously, both the amount of oil in storage and the projected demands. The rig count, the total rig count fell by 3, according to Baker Hughes, with oil gaining 2 and gas falling by 5. So the total oil rig count stands at 833. So that is your 5-Minute Fridays. If you like this video, please hit the big 5-star logo that is appearing on your screen and subscribe to our channel, like the video, and feel free to go to our website, www.fsmetals.com, to get more in-depth analysis in our blog. Again, as always, thank you for your time, thank you for your friendship, and thank you for your support. Let us know if there's anything we can do for you